Good morning, traders. Please retweet me on Twitter if you get a chance. Gumby9662C. Um, enjoy the comments below my YouTube video if you get a chance, and like the video if you get a chance. So, free service. Hopefully you guys like it. So, I'm going to start with talking about the bond market. We haven't talked about it for a while, and as I have been saying for a while now, that the bond market it rules the economy. Okay. And some things I want to mention here. Whoops. Oh, that's one of the services I use. Right here on the treasuries. uh, I wanted to point this out right here on the treasuries here. The Fed bought $8.8 billion worth of 30-year bonds today. This is a top on top of the 34.8 billion it bought earlier this week. This totals 43.3 billion in 4 days. Okay, this is in the face of we're launching the beginning of the tariff uh, deals, and I have mentioned in a couple prior videos that the big casualty from the tariff war is likely to be a buyer strike in the Treasury market. And so basically, what we're seeing in the Treasuries is reaffirming my thesis that, and this is a big problem for our economy. If this is one of our key uh, uh, stagflation indicators of that this situation developing here in the markets. So basically, what's been going on for years, for 30 years now, in exchange for uh, international community buying a lot of U.S. Treasuries, which they otherwise wouldn't be buying, and helping to keep a very low interest rate on U.S. Treasuries. We have given many countries preferred trading status over the years, and they've grown into these behemoths. That's China was one of them. So you buy a bunch of our treasuries, keep our yields down, then we'll let you just have full access to our economy. Well, Trump is trying to unwind that, and the casualty of doing such a thing is now you don't have anybody there underpinning the treasury market. If we just a month or a few months ago, whatever, a lot of the investors who had been getting into U.S. Treasuries, if they bought them 18 years ago, they were flat from buying Treasuries and holding them for 18 years, so it was dead money. And if you got talking about billions of dollars, to invest, why would you spend billions of dollars to invest in U.S. Treasuries when the net effect over 18 years is zero? It doesn't make any sense. Okay, so it's a big problem. So I've been saying that U.S. Treasury or U.S. interest rates have been way too low for too long, and we're starting to see that trade uh, unwind. And I think we're just in the beginning stages of this situation. Okay, some things I'm looking at here. That being said, as you can see on the 30-year, this has started. If you just put a regression channel from right here from those lows, so this has been going on for a while here on the 30-year. You see how we just were walking down. This happened. See, this is actually triggering before Biden even got out of office. So it's not just necessarily a Trump situation. But I do want to point out, what's going on in the Treasury yields. Um, and since Trump got in, if you just put a little regression channel right there, and I want to show you what just happened. Uh, what's happening here, guys. So so from the first of the year, we're starting to push out. We're out of last year's value, okay, and we're in price discovery to the downside here on the ZBs. So when the ZBs are trending to the downside, that means yields are going higher. So we're in price discovery on an annualized basis to the downside, breaking out on some treasury yields here. So this is really important. What's happening. It might be just a short-term event, but we have to be mindful of what is unfolding here in the bond market. Before we make our big bets in the uh, into broader markets, because this very well could be a lower high in the markets where we're currently at. So we have to be very mindful of that. And if they lose control of this, that's definitely going to ensure a lower high in the markets. So I just wanted to start with that this morning. Okay, guys. And hopefully that'll help you guys out in your trading. Okay. Okay. 1 second here. Our VX futures, pretty much flat on the session here. It's one of the worst ones performing this morning. So I thought that was really important here. The Russell is performing a little bit bad here. One of the worst ones performing this morning. Some things that I got going on here. This is a major, major resistance area. That's why I've been shorting. I have been shorting up here, period. I'm just major, major head and shoulders, possible swing high. I have been shorting this area. So, I mean, I did 3 trades. All of them were good. We looked above it yesterday. It puked right back into it. Major, major area resistance. I think we will probably fail it again today. This is major, major, major supply in the Russell. So, heads up on that. I'm going to continue, now, unless we break above these highs from yesterday, I'm just going to keep shorting it. So, shorting these highs. This whole area up here, I think, is a short. So, I mean, that's pretty much my theory on that. So, heads up on that. Okay. What's happening this morning? Ethereum is on fire this morning. Look at this, just parabolic. If I go out on the weekly now, I want to show you what's going on here on the Ethereum. So we are in a prior demand that broke down. Right here was prior demand. This is yearly. I need to go down on the daily. It looks better daily here. And that's your monthly webs. Okay. So this is a breakdown point right here. And we're currently trading right into that breakdown point. Okay. So, just be very mindful here. There was a lot of volume in the past that supported Ethereum price. So we had made possibly an oversold bounce on Ethereum. And ideally, to finish this pattern, this here is where the supply broke down. So right here was where the institutions made big bets, which ultimately led to the downside. We have not back tested yet. So we have to really get above 2680 area. We need to start accepting prices above that 26 area before we're getting bullish side participation in Ethereum. Right now, it's a short squeeze. It's it was oversold bounce. So technically, if you're a bull, you don't want to be making huge bets until we start seeing higher prices, 26,480 or something like that on Ethereum. So that just gives you some idea on what I'm looking at on that. Crude this morning. So we have a big breakdown area right here. We need to get above 62, before, you start thinking that the bulls are going to really start coming in and try and support price. Right? Currently haven't even back tested the breakdown point. So obviously, short squeezing back into the 62 is probably a reasonable thesis, given that we broke down this area right here. Okay, and so the big breakdown though, the big institutional. So we had buyers right here. We resolved higher. So this is now our big breakdown point, $71. So until we actually start seeing prices accepted above $71, you're not going to see a lot of bullish action in crude. So be very mindful of that going forward here. Okay. Okay. Let me go with SPY. And we'll go over here and we'll look at these two. Okay, SPY this morning. So we're basically flat on the week. We closed right up here. We closed at dead highs last week. We're right back into that dead high area. We had a target of almost, basically 578 was our bullish target to the upside. And then to the downside, our bearish target was 554.50. And like I said, we're pretty much flat on the week on week here. So let's be mindful of that. We saw the Russells into a major decision point right here, right now. So it's and so if you're seeing that on the Russell, you have to infer that this might be a major decision point. See, we got these prior lows right here. We're trying to see if we can accept prices above these prior lows right here. Okay. So, that's right where that close was. So, uh, we have to be very mindful of that going forward here. Uh, so, I mean, just my main takeaway there. This is the area right here, right now. This is the area that you would be looking for a dead cat bounce, low or high. Right here was the breakdown point from March. Right here is where all the institutions were making their big bets, and they ultimately resolved lower. Now, is that going to be the case? I don't know. But in March, what we saw something very different than what we currently have going on here. Uh, the skew, okay. If I go over here on the weekly, I might be able to see it better. Let's see here. Yeah. The weekly on the skew here, we're right down here near the lows on the skew. So they're actually, that suggests a lot of call activity down here. So we have to be very mindful of what's going on here. Suggesting there's everybody and their brothers messing in the calls. They're not putting any hedges on, which that can be a bad thing, but it necessarily may not be. So we have to be very mindful here. Everybody and their brother there's not really any hedging going on right now. So we have to be mindful of that. In March, there was heavy hedging back in March. Okay. So we know there was heavy hedging, which ultimately resolved lower in the markets. Now, they're just buying the calls, that suggests that the bulls are going to edge out before this is all said and done. Another thing is the VIX. That's the volatility of the VIX. Below 110, closes below 110, it's not a heightened environment of fear. You know, it's so if you can't, if you're not, if the Vivix is not over 110, we're in a a blah 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 environment. There's not a lot of feeling that there's a lot of risk. A lot of people think in May there's going to be a big pullback in the market. The market's right now not preparing for that eventuality. So just be mindful of that. Okay. Go back on the daily here on the Qs here, and we can see what's going on week on week. Completely flat week on week here. Where are we uh, in the grand scheme here? Uh, um, yeah. See this back test here. This is a breakdown area. See, we're right at the top of this range high. Okay, into this breakdown area, trying to decide whether or not we want to take prices higher here. So it's very interesting here, trying to see. Um, we have higher prices, higher potential prices. See this high right here? That would put us right inside the market maker move high for the week. So there is the chance that we could be coming up here one last move up to into the 503, 504 area yet this week. So we have to be very mindful that could be a possibility yet today. You know, it always bothers me when we're opening right on the prior week's. We have gone nowhere on the week and we come into the last day of the week. I always get a little concerned, you know, and that might not be the case, but there is plenty of opportunity to have big moves one way or one direction or another, knowing that we haven't gone anywhere yet on the last day of the week. I mean, these are the days that I really look for, some, Friday option premiums to possibly explode as we get a big directional move based on some sort of news event. So let's be mindful of that. Okay. NVIDIA. So what we got going on this morning here, NVIDIA's pretty much flat, it looks like. It's up a little bit. NVIDIA's up a little bit. We are into this fair value gap on NVIDIA. So I'm going to go back down in here. And we actually completed the fair value gap on NVIDIA. So be very mindful of that. That could be an exhaustion high on NVIDIA. And so, by doing that, we actually left a secondary fair value gap below us, which we came down. We tried to back test it this morning. So right here, this has to become new support in today's session. We really need that to become new support if you think the bulls are in play here. Okay. Um, so you can actually, instead of putting that, I can put an alert right there. Alert. If we start breaking that, then that is a warning that the broader markets might be failing. Okay. At or below. Okay, just do it that way. So there you go. So if we lose that that low right there, that'd be what was that? Yesterday's low. Yesterday morning's low. Okay. If we were to come in and lose yesterday morning's low, that would be a tell because we know this is a fair value gap below us now. That may need to be repaired. Okay. So I always worry when there's imminent fair value gaps. The shortest term fair value gaps tend to fill a lot faster than the bigger time frames. So that suggests to me a little bit more of a bearish tilt going into today. Okay. Tesla's been into this massive resistance for some time now. We're still right into it, going sideways here. We're in a sideways channel. Typically, we're at the top of the channel. If you think this is a valid channel, then the odds probably favor the bearish. Just more of the same old, on Tesla. Although I do want to point out, you see this trend line right here? A lot of times this sets up the stage to break out, to push all the way to the upside. Seeing that trend line and an attempt to backtest that trend line. So, there's a definite possibility we could be up here at 301 before the day's out. So that is something to be mindful. I've seen this pattern play out too many times to ignore it. Okay. So be very mindful of that potential, possibly 301 today, if we were to get the breakout. But, bottom line is you would have to wait for us to break above this area here, do a back test to take the long. So it's a very, very difficult long. To me, it's, very, very difficult to take the long. Google, wow. So we got a massive fair value gap that built out this week. If you are bullish to markets, this is something we really want to watch. That to see the fair value gap is a short dated fair value gap that could very well fill. So we have to be mindful of that going forward here. One good important thing about this, I did point out as it was happening, I was down here and I was calling it out. We did repair all the downside fair value gaps that happened after earnings. Okay, and when I was talking about that, and we rallied right off of that. So really important. Google's really good about repairing its fair value gaps. But like I said, we got a massive one up here, so could very well coming back up here into that 160 area in the short term. So my opinion here, I'd much rather edge to the bullish side. This area where we're currently at now, this earlier this week before the news came out, this was a demand area. Okay, this was a demand area. And when that news came out, they came in and they just crushed the demand, and that became short-term supply. Okay, because we went right through it, and now that might be actually building as demand again. So, in my opinion, because it has been demand, I'd much prefer this thing to be demand again. So, I'd much rather edge to the bullish side on that one. Nova Nordisk, that's a European company. I don't really follow that one. Taiwan Semi this morning. Can't really say much about that one either. Yeah. I did mention I was really worried about the currency risk we were seeing in Taiwan, and that very same day it started selling down. This is on the bullish side of trend, so let's be mindful of that. And excuse me. And with mentioning that, that's a big holding in SMH. So we are currently in a fair value gap on SMH. Going to keep an eye on this one here. This thing here might need to repair, may very well be trying to repair today. So I do want to point that out. This could very well be repairing today. The MACD is crossing over here on the 1 hour. I definitely want to keep this on watch. This is another suggestion of some bullish potential here to repair this fair value gap. So I definitely want to have that on my radar. Amazon's on the radar here, thinking I could very well see Amazon breaking out today. So we've been looking for this big breakout on Amazon. If you go on a bigger time frame, this thing has been stuck in the mud. Okay, we've been at these prior highs, and now we're trying to push out. We did a back to. I really like this chart pattern here, guys. See these prior highs right here. So these prior highs, yeah, this whole area right here. We just did a back test. So this sell off right here did a back test, and I really like this setup for a breakout continuation to the upside. Wow, this is a really bullish scenario, and that would take us up into this fair value gap up here. We might be up into the 196-200 today on this trade. So this is my favorite. This is going to be my first top watch today, that this thing here could very well be breaking out. And we know we're talking with China tomorrow about the tariffs. So this could, this is interesting on the bullish side. So be very mindful of that. So situation, they have a massive tariff exposure. They're going to talk with China and stuff. So I definitely want to keep this. Any of these big companies, Amazon and Apple, have massive exposure to China. And knowing that we're going to have the big talks tomorrow in Geneva, I really don't want to be overly short these names. So let's definitely keep these on watch in today's session. Okay, we have not completed the fair value gap above us. Don't know if we'll get anywhere with Apple here, but it's definitely, yeah, this here is just a lot of sideways noise. But Amazon, really, I love that. There's Google, Microsoft. Microsoft almost completed the fair value gap. Came awful close to it yesterday. And, that's why I really don't want to be too bearish to markets. I've really been looking for Microsoft to complete the fair value gap before I actually wanted to start loading the boat to the short side. It has not done that yet. It came awful close, but it didn't quite get there. And we'll see if that plays out. Meta has been acting very good. Here's what I want to point out. We completed the fair value gap up here, and I want to point on the 4 hour. This one here was giving me a little warning on the 4 hour. This was yesterday's afternoon's 4 hour chart candle. Guys, we completely reversed the morning session candle after hitting that fair value gap. We're in this channel. This one here could be a problem. Okay, so Meta is actually the kind of rejection we had in Meta. That's actually giving me a little bit more of a bearish signal. So we'll be very mindful of that going forward here. That 4 hour rejection might be something to definitely worry about. And we are into 2 weeks supply, not demand. We currently, though, you see how we bounced right off that supply area? So heads up on that. So we bounced right off supply. So that might be flipping to demand. So bottom line is, if we lose this low, then we want to start looking short. So far this morning, it looks like a critical back test after completing the fair value gap. So I'm not going to overly state that we're in a lot of trouble there. Okay. And we're into right there. We're right into major areas here on Broadcom. So be careful on that one. There is a gap fill above us. Doesn't look like it's completely filled. So we do have a gap fill. So 212 area could very well be in charge. 212.50, 212.33 or something like that. We haven't completely filled that gap. So a push up on that one as well. Netflix, check it out. Netflix has just been a beast. So we've been in this really great channel. We're finally breaking out, going sideways outside of this aggressive channel. This looks like consolidation at these highs. Walmart has a lot of exposure to China too. So heads up on that. We got massive fair value gaps above us. Massive. Because of everything going on. We know that the shelves are going to be empty here in a few, starting to be, empty out here in a few weeks. And actually, we might actually here start seeing layoffs in the distribution centers for Walmart as goods are not coming in from China. So be very mindful of that. Okay. Okay. That's just a few things I'm looking at this morning. It's going to hinge a lot on what's going on in China. Maybe it's just a wait and see today, but there is, there is a very good chance that we're going to see a buy the rumor day and push us even higher. So that's my primary thesis. And good luck, guys.